Say hello to Marcus Carlson. I know that the floods in Britain are weighing on the economy, but there's also the thought of that referendum in September.
Yeah, absolutely. And ahead of that referendum, the British Finance Minister or Chancellor of the Exchequer, George Osborne, he's come up with a pretty sound or a stern warning, I should say. George Osborne says that an independent Scotland would not be able to keep the British pound. That is seen as a stern warning, as I say, and the sternest yet from the British government ahead of that independence referendum, which is coming up in September. Scots will vote at that point whether or not to become an independent nation, and economic issues in general and the pound in particular is playing a big role in the campaign leading up to that vote. Julia Seeger has more.
The pound isn't an asset to be divided up between two countries after a breakup as if it were a CD collection. The value of the pound lies in the entire monetary system underpinning it. If Scotland walks away from the UK, it walks away from the UK pound.
Okay, that wasn't Julia Seeger, obviously. That was George Osborne, the man himself, speaking there ahead of the independence referendum, which is coming up in September, saying that Scotland would not be able to keep the pound. The Scottish government and the Scottish National Party has basically made that a cornerstone of its campaign ahead of the referendum. They say, Alex Salmond, the First Minister, says that Scotland should be able to keep the pound. We're going to move on to the deal of the day now in the United States. The American cable company Comcast has reached an agreement to take over its smaller rival Time Warner Cable. The deal would include America's two top cable companies, and the two would have more than 30 million subscribers. Comcast is paying a whopping $45.2 billion, and that trumps a previous offer from a smaller rival that also wanted to buy Time Warner Cable. It's not a done deal just yet, though. Regulators will have to give the green light, and analysts warn of tough scrutiny ahead, since the combined company would account for nearly 3/4 of the US cable industry. To pave the way for approval, Comcast says that it'll leave some markets, which would lower its customer base by 3 million people. The companies also say that their businesses rarely overlap geographically. Also, the two companies are referring to the growing popularity of alternative services to watch television online, and that includes services like Netflix, for instance. Now, shares in Time Warner Cable, they've been popping over on Wall Street this session, but Comcast has lost ground, and that brings us to a look of the wider markets and at how they are faring this Thursday. Over in the United States this hour, we're seeing gains across the board. It follows strong earnings from firms like Goodyear, the tire maker, and also TV channel CBS. It was a little bit more of a mixed picture in Europe. The FTSE in London slipped, but the CAC and the DAX gained. Italy's main stock market index also fell back on the prospect of political turmoil there. This as the Prime Minister Enrico Letta has now resigned. Let's talk you through a few individual companies and their share price. Shares in BNP Paribas lost ground after the French bank reported a drop in quarterly profits. The bottom line was hit as the lender set aside $1.1 billion to cover legal costs. The bank says an internal probe has uncovered evidence that it may have breached US sanctions. Other European banks have paid dearly for violating sanctions on countries like Iran, Cuba and Burma. Shares in Rio Tinto slipped even as the mining company went back into black last year. Rio says it made almost $3.7 billion during 2013. That follows a full-year loss of $3 billion in 2012. Rio Tinto says that it's proof that a cost-cutting drive that included thousands of layoffs is working. And the jobless rate in Greece has hit another record high. New figures show 28% of the workforce was out of a job in November. That's an increase from the previous month's rate of 27.7%. Greece is suffering from the highest jobless rate in the Eurozone. Prime Minister Antonis Samaras says the economy is on the way to recovery, though. He's also unveiled a new council to promote and organize job creation. Still, though, 28%. It's a pretty massive figure, and another harsh blow there for the Greek economy, Francois.
All right, well, thanks for that. Marcus Carlson with all the day's business news. There'll be more news later. We should turn now to sports and the Olympics. Let's say hello to